So welcome back to the channel. In this video, taking a look at Cobie unveiling the Coinbase insider trading, which has now led to 3 arrests, or 2 arrests being made and 1 on the table, as they are after the other suspect. So this comes months after he had been tweeting about insider trading, the front running of new listings on Coinbase. Well, now we're starting to see some action being taken. And we're also looking at Coinbase's rather mediocre response to this and kind of their negligence within this whole mess. But first and foremost, starting with a quick market update here, we can see BTC has approached the first line of resistance here at around 23.5k, the first yellow line. This was an area on the chart where we were expecting price to come and tag. It has now come and done so. A slight retrace over the last 24 hours, but we're now pushing up against 23.5 once more. Now, the major pivot in the market here is around 21.5k. This was the previous highs. We came and tapped 3 times before breaking through. If we do go below this kind of area, on a medium-term closing basis, it looks like we're going to go and see the range lows once more. But as it stands, we are holding quite nicely in this pattern here. Bitcoin looking fairly bullish right now, and the top line, 26.5k, that is Crown's line in the sand for a nice pump-a-roo coming here. So those are the potentials on the table as we see it right now with Bitcoin. In terms of the last 7 days, the biggest movers in the top 100, you can see Lido's DAO, the Lido token, is up 77%. This coming off the back of them just announcing that in a buffer against bear market conditions, Lido opens a new door for DAO money management, potentially selling 2% of its treasury funds here. These are uncirculating tokens. 2, it looks like Dragonfly Capital are the ones named down here. So this will see them try and shore things up, have plenty of runway for up to 2 more years of bear market activities. There's some big brains behind Lido, clearly, and also Dragonfly as well, go hand in hand. And you can see that they're looking at this, a potential 2-year bear market. So do bear that in mind with the bullish price action. Don't go sticking your neck out on the line. I'm sure we will have plenty of time to accumulate our favorite cryptos. The most interesting chart right now is Ethereum. However, the merge narrative and now Vitalik coming out with 100,000 transactions per second, the merge, the splurge, all these different things. There's more bullishness here for ETH, which is looking pretty good here, moving towards the top of this third resistance against BTC at around 8 million Satoshis here. So we're pushing up, we're at 7 million now, that third resistance at 8 million. Could we see ETH BTC really break out here, even in a bear market? I wouldn't put it against it with the merge narrative in play. So interesting times here within crypto. But what we're going to look at specifically is this. So today there was an announcement, or over the last 24 hours, an announcement that Coinbase's product manager, Mr. Aishan Wahi, has been arrested trying to flee the country. Now this is on the back of accusations of insider trading. Now, for anyone who has been in crypto any length of time, we all knew about the scam pump and dumps of many of these Coinbase listings. It was pretty much common knowledge that something rather fishy was going on in the background, but there had never been any real, resolution to this until now. So it says a former Coinbase exec was accused by the DOJ, that's the Department of Justice, of wire fraud by buying tokens before listing and selling them during the hype. Didn't do a particularly good job of even disguising things here. So it sounds like, according to this data, that this guy and his 2 other friends, so one of them being his brother and his partner, they pocketed around $1.5 million net off the back of playing the old pump and dump game. You have the information, you work at Coinbase, you know what listings are coming up. Increasingly frequent, it became more that Coinbase were listing shitcoins, ones with quite low liquidity, and so obviously the pumps could be even bigger. And these guys knew what was going to happen. They knew when the pump was going to occur. They knew when the listing was coming. You buy before, you sell after listing, as simple as that. So within the main news articles here, it frequently references a Twitter post was critical to this investigation, or a crypto personality, something along those lines. But the man behind this is actually our favorite, Cobie, the host of Up Only. Absolute Giga Chad legend, one of the best follows over on Twitter. So let's look into what Cobie has done here. So he's been rather infamous for many years for his banter, his, dry British humor, but also just getting things spot on in the markets. He's seen many market cycles, and you can see through the BS effectively. So actually, within one of the filings here, this goes into what's occurred, which is that this guy, Ishan, has tried to flee the country on a flight bound for India, but he has been arrested at the airport. So this goes into detail here that Mr. Wahi had traded in advance of Coinbase listings. So on April the 11th, 2022, and then around April the 12th, this infamous Twitter account, which is Cobie, well known in the crypto community, they say, with hundreds of thousands of followers, tweeted that it had identified an Ethereum blockchain wallet that bought hundreds of thousands of dollars of tokens exclusively featured in the Coinbase asset listings, post about 24 hours before it was published. So then you have the pump, and then this guy had been dumping. So they didn't really give any credit within the main news to Cobie, but we've got the details here. So this is the original post back on the 12th of April. Some of the shitcoins in here, the likes of Paper, DFX token, which is incidentally being called a security today by the SEC and looks like it will be delisted, RAC, DAP Radar, Chromatic, and Indexed. So he says, found an ETH address that bought all these coins, and then he has, been dumping them afterwards, rolling on the floor, laughing. And then he even tags the post from Coinbase within their blog, which talks about increasing transparency. This post has now been amended from the original. They've, deleted all the incriminating tickers and names of said tokens. But I found a beautiful example of one here. This was actually the Muse token. So this was the Coinbase listing around this date, or towards the end of June, around the 22nd of June, something like that. It lists, it's around $4 maybe. And then upon that Coinbase listing, this is a low liquidity token, and it shoots all the way up to the wick of around $18, $19. So that was the Coinbase effect in full there. So of course, Mr. Ishan and his brother and girlfriend clearly were able to play this game time and time again. So this one had been in a down only market, gets the listing, gets a gigapump, and you can easily play that and make off like a bandit, and they did with $1.5 million. So that is the tail of the tape there. So what has Cobie had to say about this, and what has Brian Armstrong, CEO of Coinbase, also said about this? Cobie says this: when I tweeted the insider address tweet, I had been tweeting for months about how Coinbase's listings, the front running, the token choices had become a huge mess. Coinbase front running was widely known and acknowledged within crypto Twitter, but now Coinbase plays the hero, catching the evil fraud, as he says. So Brian Armstrong earlier had posted this: at Coinbase, we actively monitor for illegal activity and investigate any alleged misconduct. In April, we received information about possible front running of assets shortly before being listed on Coinbase. We immediately launched an investigation into this. It couldn't be that difficult to launch an investigation. You just monitor all of the wallets that bought up these coins, and you would have your answer pretty damn sharpish, I would believe. However, as a result of our investigation, we have identified 3 suspects and provided this information to law enforcement. One person was a Coinbase employee who we've now terminated. Today, the DOJ has criminally charged this former employee and the 2 other individuals for this abusive conduct. I want to thank our legal security special investigation team, etc., etc. Big pat on the back for everyone at Coinbase, it looks like. So a bit of a PR move here. Guy from Coin Bureau, throwback to 2017 when Coinbase said they were investigating claims of insider trading around the Bitcoin Cash listing. Great to see that after 5 years, they have finally been able to catch an employee for insider trading all by themselves. As we know, this is not all by themselves. This is quite a bit of, the kind of peer pressure, the influence of Cobie and crypto Twitter here to really say, look, we've got to sort this crap out. The regulators are going to come for us hard and fast if we don't get a hold of what is going on within this industry. So Coinbase has been negligent in Cobie's eyes here. So Cobie's rebuttal to Brian's statement here: I doubt that they actively monitor with any degree of competence. The front running lasted for over a year, and surely Coinbase should have found these individuals before randoms on Twitter did. Zach found wallets, that is Zach XBT, connected to several other Coinbase front runs from one I tweeted. Front running with insider info is bad, illegal, and whatever we know it happens. But what I find more surprising is how Coinbase is unable to monitor and identify this themselves. We know it's happening, they must know, but they need to identify it by me joking about it on Twitter. How does this make sense? Isn't it Coinbase's duty to have strong processes and checks around their core product offering, crypto for exchange? They are a publicly traded company. They know which coins are going to get listed. It's not hard to find the wallets that are buying those the day before. So yeah, it's a bit shit that law enforcement will try to make an example out of these people. So, these are going to be scapegoated here and probably have some stupid, maybe high price to pay for what has happened. But he says Coinbase are the ones who have been neglecting their duty and operated with insufficient processes, enabling it to get to play the hero and community steward. And he says even until mid of last year, a Coinbase API was leaking new info listings quite frequently, and so clearly these guys were incompetent, and in his opinion 1.5 mil in front running stolen by some staff member over the course of a year is barely a speck of dust compared to the damage done by prior incompetence at Coinbase. And clearly people in power did not want this to come out. I was being asked by several powerful crypto industry people to stop tweeting about Coinbase's listings and front-running issues because it was bad for the industry. So that is the key takeaway here, that people in high places are probably no smarter than us guys, cutting corners, not following through on the processes they say that they uphold. And as a result of this, you get bad things happening within this industry. There is obviously a long list that can be written at this point. Someone here was pointing out that the amount of volume coming in the day before, it must be more than 3 guys, but Cobie says, look, people could be, finding who was getting listings early and just copy trading those wallets. So before you know it, you could have hundreds of traders also front running these attacks. And someone also points out you've had no thanks for this, but he doesn't care about the thanks. He is the knight in shining armor that we all need here. So thank you very much to Mr. Cobie down here. But the sad state of this is that probably these individuals are going to get very harsh punishments, whereas Coinbase will probably not even get a slap on the wrist for this. They're actually, doing the lap of honor saying we've caught the scammers, but their negligence, their lack of due process is what caused this mess in the first place. Now, just to finish up with the Elon Musk Tesla BTC sales, this one was quite interesting for me as well. This week, probably the biggest story about, you've got one of the richest guys in the world and the most renowned company selling its Bitcoin holdings. They sold off 75% of their BTC, worth roughly around $2 billion at the end of 2021. And within their Q2 earnings, this is obviously a reason why they had to preserve as much capital as possible, as earnings were going to be down. So they dumped their Bitcoin, 75% worth. They still hold 25% worth, but is this all doom and gloom or not? That is the real question here, because obviously one of the key narratives last year was big corporations are coming in and buying up BTC. Now it looks like Michael Saylor is just steadying the ship on his own as Tesla are kind of pulling out of this kind of move. Tesla sold 936 mil worth of BTC, 75%. Musk said that we are certainly open to increasing our Bitcoin holdings in the future, however, but the reason they sold was due to, uncertain conditions. There's been more lockdowns due to COVID in China, and they want to increase their cash position. And also, Bitcoin and crypto are not contributing for an environmentally sustainable future just as yet. So that is his get out of jail free card on those points. But clearly, COVID is an issue still in China. Supply chain issues still an issue with China. We know that gas production, things like that, pretty bearish on the macro front here. And we can see also with the likes of Apple not backfilling positions, not hiring new staff. The biggest companies in the world are making moves to start to shore things up for a bear market and a recession here. So bear that all in mind. The macro backdrop is still pretty damn bad. So there we have it. That is our update. Cobie doing God's work once again and keeping the mean streets of crypto clear. I hope you enjoyed this one. Subscribe to the channel. See you in the next one. Goodbye.